Good morning, everyone. It is half an hour before the market's going to open on Friday, June 28th. Apologize for missing yesterday afternoon. I had a situation with my daughter and dentist, and I won't get into it, but we'll just recap what happened yesterday real fast, and then we'll go into what we want to look at this morning. So yesterday, we were talking about how we're probably going to be very range bound. There wasn't a catalyst in the market, and we didn't feel like that we would traverse many of these sections right here. And we said, hey, we're probably going to stay between 548 and a half, this purple line, and most likely this red line, or on if it was a slightly more negative sentiment, then we might go all the way down to this purple line right here. Well, we stayed well within that boundary the entire day. We just kind of chopped back and forth. It wasn't really anything exciting or significant. We had a very low volume once again. And today we have the PCE report that we're hoping will jumpstart us a little bit and give us a little bit of a catalyst to start moving in one direction or the other. So let's take a look and see if that might happen. But we also have the July 4th holiday coming up. So there's a chance that we won't get that stimulus. We did mention that there's also month end and that fund managers have been taking money out of the markets. And if they want to take risk off before the weekend and go on vacation for the next week, then we may see some downward pressure in the markets today. So let's take a look at that PCE report and see, let's see how that turned out. So PCE year on year, prior was 2.7, consensus was 2.6, actual 2.6, came in perfectly at consensus. And it was just barely tiny bit lower than the previous. What this means is that on a year basis, as they're measuring it, from today or whenever they stopped measuring it, it might probably last month, and the 12 months before, the prices that people are paying or the amount that people are spending is up 2.6%. And for the 12 months before that, it was up 2.7%. It means people are still paying more. It's just that relative to a year ago, that growth has slowed down a little bit. I sort of like saying, I'm accelerating to get on the freeway, and as I'm getting closer to getting on the freeway, I'm not accelerating as fast. I'm still going faster and faster. I'm just not getting to that top speed as quickly as I was before. So this isn't great news, but it's okay that it is. We're right on consensus, so we're probably not going to have a huge effect from this report. The core price year on year slowed down a little bit more significantly from 2.8 down to 2.6. So we'll see if the market interprets this as positive, but for me, this would be a neutral report. There's not much effect. So let's take a look at pre-market. Pre-market, we went up, but that was overnight, and especially during the Asia session. The report was right here, 5:30. You can see just tiny little blip to the positive side, and then we've really kind of sold off since then. So the market also is not interpreting this as wonderful news. Maybe people were expecting even better, and we could see that this is quickly moving downwards as we're looking at it. Let's take a look at our futures. All right, our S&P 500 up about 20 to 20 basis points. NASDAQ is up 30 basis points, and then the Dow is completely flat. So we have a positive bias. It's non-random in the NASDAQ. It's random in it is on the verge of not being random on the NASDAQ. It is random on the S&P, and we're just completely flat on the Dow. So this is a little bit more of a normal pattern of what we normally see. Yes, there's disparity between the Nasdaq and the Dow. Usually the gap isn't this large though. It's not completely flat, and then we're basically non-random on the Nasdaq. It shouldn't be this big of a gap, but it's not a huge disparity, so I'm not going to belabor it. So we just have a very tiny slight bias, mostly in the Nasdaq, mostly in those most tech in the tech sector. Although we did see the consumer discretionary come up a little bit over the last few days, and actually looks better than tech does over the last 2 days. And we are starting to hit a period seasonally that is strong for consumer discretionary. So this might continue. So during the summer, there's a tendency for consumers to spend more because of summer vacation, trips, airlines will do well, casinos will do well, cruise ships will do well, anything related to travel will do well, restaurants tend to do better, kids are out of school, and we're spending on activities for them and food for them. So discretionary tends to do well in the summer. This could continue, and if it does, then we get a broadening of bullish sentiment amongst the sectors, at least. So we were talking about for a while how the money is mostly concentrated in SMH. Well, the last week we came down a little bit and then went flat. And then we had XLK, which did the exact same thing. It's following basically SMH. And then we had the subsector in tech of communications. That's doing well. That's looking a lot like discretionary. So now it looks like the main components of QQQ are getting stronger. So we'll want to see if the SPY follows suit, meaning does that sentiment bleed out into the other sectors? Fundamentally, there's no reason for us to believe that they will, but you never know. You never know how people are moving their money. What I can tell you though, it's not driven institutionally because we don't have the volume for it to be driven by institutions. It is algorithms, which are just trying to pick things off here and there, that those will operate off of technicals and not fundamentals. And then you have the retail traders. So can we trust it, the broadening of this market? I would say no, not yet. Not until I receive real breath and I see real money coming in. So it's still a risky market, in my opinion. We don't know what's going to happen overnight. We don't know today if there's going to be institutional selling to take risk off the table over the next week. And so I'd just be very cautious. Normally, I would say QQQ is looking really good. It's hard to justify continuing to hold on to a hedge in QQQ unless it's hedging a black swan event. So an outright hedge on QQQ isn't super appropriate right now. The one that we put on earlier, I'm taking off personally. And then, but there's still heightened risk. So there's got to do something about that. And my answer to that is let's just rebalance and go slightly bearish, even though technically, but if I truly evaluate it, I would want to, if it was like textbook, if I was going by textbook and I was training someone and say, okay, in this situation, we do this. In this situation, we do this. I would say, yeah, we would want a baby hedge on QQQ and then keep our portfolio balanced. But from a practical standpoint, it just doesn't make sense when the bullishness is very concentrated to hedge on the entire QQQ because we're just beginning to get breath in the QQQ. So I'd rather have a sector specific short position, baby short position in my portfolio. And I could take the approach of very technical, like a very, very weak semiconductor stock, or I could take the approach that since the entire market is being held up by tech, if tech breaks down, the entire market breaks down. So I could just select a very weak stock in general. So that's up to each individual portfolio as to which approach we would take. And in any case, we would just look for very weak stocks that are in the market right now. So it doesn't look like we got the stimulus that we wanted to from the PCE report. Still coming down, maybe a little bit of recovery right now. So we're going to go into this with a little bit of downward momentum. Not enough to erase the gap from the previous day close. So we may head towards the previous day close. That's more likely direction as we open up this morning, is to revert towards the previous day close and then probably random from there. So maybe traversing this one purple section for most of the day. And then if we get some weird sentiment coming into the positive side, I don't see that happening, but I could be wrong, especially if it's very low volume. Retailers, we don't know, maybe they would just drive prices upwards, but we'd be capped out at this 551 level, most likely. And then if not, then we'll see this bounce around, and then maybe at the end of the day, we'll see institutional managers give up their hand, meaning are they going to take risk off and take off for the week, or are they comfortable with keeping things on? I don't think anyone's going to be adding in significant volume towards the end of today. It is month end. We do have July 4th coming up. A lot of people are going to be taking the entire week off, and there's just not anything in this market that is screaming buy me. There's no sector that is saying, hey, we're doing so well that very clearly you should be pouring more money into it. So let's take a look at those sectors real fast. Okay, semiconductors pulling back, but until we get a reason for us to say, hey, are we taking money off the table, or are we taking profits, or is there a good reason for us to continue to buy into this market? And if we look at XLC, okay, XLC, we can make an argument, hey, maybe we'll take a look at some strong stocks in XLC. Silver down, like this XLK, QQQ, same thing as SMH. Right? We have silver, SPY in the same situation as the QQQ. Silver is just pulling back, waiting for a decision on whether we're going to a flight to safety or we're going to continue to put risk on in the markets. Home builders is going to be rate dependent, and if it becomes clear that we're not getting a rate cut, then this will fall through. Financials chopping back and forth. Gold, same situation as silver, except much more sideways choppy movement. XLI, sideways. Retail, sideways. Energies, we'll take a quick closer look at that. Healthcare, sideways. Defense, sideways. Small cap, sideways. Dow Jones, sideways. Consumer staples, sideways. Materials, sideways at the bottom of this channel. So I would have to form an opinion. Do we break down or do we bounce back up? Most likely bounce back up, but that's not enough for an institution to say, hey, let me pour a whole bunch of money into it. This kind of $2, $4 movement isn't what they would be looking for. Utilities is looking pretty weak. Consumer discretionary, we did say that looked strong, but we are approaching resistance levels. Real estate, sideways, and bonds. So we want to take a look at bonds. We want to take a look at energy. I think that was it. Communications. Yeah, let's take a look at bonds and energy. TLT. TLT is just chopping back and forth, chopping back and forth. So no real decision here. I'm not going to expect anything over the next week as well, because a lot of people, a lot of the bond guys are going to be on vacation as well. So let's take a look at that energy sector. Energy is really interesting because right off the bat, this is what I see. Okay, and then, but then you're kind of sandwiched with that, the MA200 right here. So pre-market, it looks higher up to the high 2 days ago, which would be above that purple line that I just drew. But we'll see if it stays up there today, because this is a very strong downtrend that is developing. And it did bounce off that MA200, but we could test it again. It's going to hinge on probably the strength of the economy. If the economy continues to be strong, if we see producers continuing to produce and the PMI indexes are producer, not prices, but PMI, not PPI. PMI indexes, if they remain strong, then this energy could recover. But otherwise, we expect it to continue to move downwards. And seasonally, well, it just depends on what kind of summer we have. Some summers we have a lot of people driving around and utilizing gasoline, traveling on airplanes. And so we say that generally that is strong for energy prices. But every once in a while, we have these summers where people are really feeling the rise in gasoline prices. The economy is not so great. So right now we're in a period of high inflation, and we saw that the consumer sentiment isn't that great. So do they spend as much money? Are they comfortable driving their cars as much and taking road trips? We'll see. We don't know yet. That's something that we won't know until a little bit later in the summer. Like the July 4th weekend actually will be a big data point to see if people drive their cars around a lot. So this is a question mark. It does look to me, if I just look from a pure technical standpoint, I'd say energies are going down. But we'll see after today if that pops back up with gusto, then that this could be a reversal. But so far, lower lows, lower highs. Yeah, I'd count this one. That's sort of like counting this one instead of this one. That's kind of an in-between level. So I'd count this one. Okay, so basically today, probably going to be pretty quiet in terms of volume, unless we get a volume spike towards the end of the day, last 2 hours or 1 hour of the day, and fund managers decide to sell off some positions to take risk off before the vacation week. Otherwise, I'm not expecting, very much like yesterday, not expecting a lot of movement or a lot of action, because this PCE report just didn't, I mean, it did actually. Initially, we had a big spike, but then this sell-off. So what we're saying is that the overall sentiment is, hey, I had an unknown in the market. Now I know. And now that I know, I'm comfortable moving in a certain direction. And that certain direction is down. And so mostly I was probably planning on selling a whole bunch of stuff, but I was holding off just in case this PCE report came in really, really positive and the sentiment was just really strong. Now that I got it and it was just kind of a mostly neutral type of report, now I'm going to go with my original plan and just sell my positions. So that's really, it's looking like more likely we're going to chop around, and then towards the end of the day, the fund managers are going to sell off some positions over here. So I think that's about it. Just be careful. Get caught up in don't if be careful of any traps, any bull traps for sure, and any bear traps, because probably towards the end of the day we're going to start seeing a bit of a sell-off. I don't know if it's going to be a huge sell-off, but most likely it would be downward pressure towards the end of the day. All right, guys, have a wonderful rest of your day. We will not have an aftermarket session today because it's Friday and we reserve that for the weekly market review. So have a wonderful rest of your weekend as well. And I will see you on Monday morning.